Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a rainy Denver, Colorado. Not too shabby. It smells beautiful outside. I'm ecstatic about that and pleased to be joined by my friend, Mr. Ray Kimbrell this morning. Ray, it's great to see you, buddy, on this Monday. Not that we didn't just spend the weekend together. How are you, sir?
I'm doing great and great to see you. Yeah, it was great coming off a wonderful market drive event that you hosted for us and wonderful job, I must add.
Thank
And
you.
yeah, we're fixing to have a rainy Texas here in a little bit, but right now it's pretty dry.
Well, that's a little out of character for y'all, but
Yeah.
don't worry, you won't get washed away, I'm sure. Hey, we've got plenty to get to. I should also mention we're joined by Brent Moores in the chat, who will manage comments and questions Ray and I are unable to get to. But we're going to keep an eye on what's coming through in the Q&A space there, so please feel free to post your comments, your questions there in chat, and we'll try to bring them to the discussion where pertinent. We're going to look at a bunch of charts with all of you as we set the table for the week. Follow us on X. We're all available there. Brent Moores, CS, Ray Kimbrell, CS, and Kevin Horner, CS. Best place to find us if we're not hosting classes for you here on the channel. Let's get to our disclosures, and then we can actually dive into the meat and potatoes of the conversation. So first of all, remember that everything we cover here is exclusively for your information and your education. We do not make recommendations nor endorsements for any approach to trading the market here. We will, however, utilize technical analysis as we review the various areas of the market. We remind you, however, that technical analysis is merely one of your decision-making puzzle pieces. It is not the entirety of your decision-making puzzle pieces, though. So what we encourage you to do is you consider it as you're deciding whether to buy or sell your positions, but not to rely exclusively off technical analysis. Now, if this is your first time joining us for a Trader Talk session, we take this top-down approach to what we do here. What that means simply is we start broadly, we work our way through the major indices of the market, work into industry groups, sectors, stocks in the news as well. We typically carry the stocks in the news portion in our final 10 to 15 minutes. So if you're sticking around for those individual stocks, that's the time frame to be looking for. But we're going to start, as I say, broadly here with our S&P 500. As I pull this up, I want to remind us, Ray, we are still in a bull trend here. We didn't have a great day on Friday, but depending on which of these moving averages matters to you, you could easily be considered to be maintaining this uptrend that we began in April.
I totally agree with you. I think a lot of the news and what's going on from the China summit coming back and the Iran news still has things at uneasy state, so to speak.
Mm-hmm.
I think we're seeing that a little bit, but yeah, pulled back, but pulled back right down to that short-term support level, though. So that's kind of interesting to see.
Yeah, and we've talked about the 20-day and orange there for a while, but really the 10-day moving average is the one that's been kind of the prevailing one, and it's a delicate decision as you're thinking about it, isn't it, Ray? I mean, if you're used to working with the 20-day, you might not think about speeding things up, but when you look at the consistency of this 10-day, the yellow line that I've applied now, it seems to be the most important for the current trend. Do you agree, or do you think that that's maybe too tight for trend management?
No, I think especially how fast things are moving around right now, I think it's a wise thing to look at. And a lot of traders, I think, are doing the same type thing because of the quickness of the markets and how they're moving right now. I think if you look and as you look at that trend line, or I say trend line because it's acting as a trend line,
Mm-hmm.
and in support or resistance as it was going down earlier back in earlier March through the end of March. You
Yeah,
had the
sure.
same look where it acted as resistance, then it bounced, and then it's acting as a vertical or a vertical or a horizontal type support or resistance levels.
So you're right. There was a good period here where we basically, from the end of February until the end of March, so a good 4 weeks,
Yeah.
using that 10-day as resistance every step. And so one of the things I'm reminded of course, is the speedier moves to the upside and downside often need a faster moving average for management of your risk tolerance. And here in the 10-day scenario, it's a very limited pullback But the reminder needs to be that we're not the only ones watching this 10-day moving average, Ray. The likelihood is a lot of traders are watching it. It's that aspect of technical analysis, the so-called self-fulfillment, where many of us are looking at the exact same things. But it can be helpful to remember that, because if we're all looking at this and it breaks down from this level, Ray, then it's apt that we're going to get maybe some more selling than we might be comfortable with.
This is true. And it's gonna be a big week of news. You got earnings, a lot of earnings statements coming up. So it'd be kind of interesting to see how this how this flows out. But yeah, I totally agree with you, especially if you break it. And right now, it's testing it. You can see this morning already, although it's just starting, um, well, which way we're going to go.
So my last question on the S&P, Ray, is whether if we break the 10-day, is there an area that you would consider to be the next layer of potential support? Would
Yeah,
it
I'd
be
say
a
right there.
dynamic moving average like the 20-day, or would you look horizontal?
I kind of like, I tend to look horizontal, and I'm
Okay.
saying right there around that oh 70 70 to 75 range, right in there,
Okay.
where you see that kind of short term, that big, yeah, right there where that candle broke.
Yep. So you're talking about the gap ledge here, where
Yep.
we moved through it to the upside, created the gap. We did not test it as of yet. So if we were to break the 10-day on even an intraday basis, granted that would be a significant one-day move, something in the neighborhood of 120 to 130 points, this becomes an important spot for us, because we know that gaps really do give us a little bit more insight than maybe the standard horizontal resistance or support. When we gap through an area, it frequently will act as support now that we've gapped it to the upside. So we shouldn't be surprised to see this level if we break the 10-day.
Be interesting if you throw the 20 on there with that
Sure.
level of, yeah, look at
A little bit
that.
of confluence, we might say, right?
Yeah. So that's kind of interesting.
Okay, that is interesting. So yeah, so 72.75 is our 20-day. So we're watching the 10-day for that approach. And one other reminder, everybody, if you're going to watch the 10-day, well, the 10-day level here is 73.93 right now. One thing you can do is always just kind of put a line in your intra-period charts, something like so you know exactly where that level comes in. I said 73.93 or so. So if I was to snap a line right in there to give myself something to keep a close eye on, now I can do that for the remainder of the day and know that this is an important spot. So if we, look at this on the 15-minute bar, you look at it on the 1 hour, but it gives you an area to monitor intra-period, as we know the importance of that level relative to the daily chart, right? So be
Yeah.
thoughtful about your review process here a little bit. Now, I'm pretty confident we're going to see a lot of similarities here, Ray, because we've seen some consistency of the three major indices. I'm going to leave that 10-day up, and you can see exactly why, Ray. Everything's the same. Back to April 1st, recaptured the 10-day, have held it on a close each day since.
Yeah. And yeah, so I mean, I like the 10-day as you're displaying it here, Kevin. I think it shows it shows a complete picture, so to speak. Again, you know, as you stated in the very beginning of the class, you know, it doesn't guarantee anything's happening.
Right,
You know
that's
what I
true.
mean?
Yeah. Yeah, we know better than to think that what I analyze as in the way of price action is the way it's going to play out.
Yeah.
That's largely because we know technicals are very much hindsight visually, right? We look in the past as a means of understanding what may occur in the future. It doesn't give us any real predictive insights other than ways to manage our own comfort for risk. And ultimately, that's all technical analysis is for us. We talked about it with the SPX using the 10-day, with the NDX using the 20-day as well as the 10-day. If I did the same level of analysis that we just did on the SPX, Ray, we could also see the same thing playing out here. Gap
Yeah.
zone move on the
Look
same
at that.
day into May 6th, and the level there coincident with the 20-day. But one thing that I'm noting, The S&P chart, Ray, we had the RSI break the overbought condition. It went from above 70 to below 70, but the NDX here still holding up. So some traders look at the RSI, if it's above 70 and then comes below it, they use that as a potential sell signal for portions of their trade, simply because it just implies, Ray, that there's been a little bit of a softening to the rally.
Yeah, and as it depicts RSI, it's and I think you have, is it the 14? You have the
Yeah, it's the default 14
yeah,
period.
14 day. And so, as everybody, you may or may not know, folks out there, that means, over the last 14, in this case, days, because it's a day chart, it's looking at where's that price closing, you know, on that average. So in this case, it's in the lower range or the higher ranges. Now, one thing
Yes.
to add, Kevin, on that is, it's a pretty long extended overbought range, so to speak.
Hmm.
And so a lot of folks also think that just because it's a longer range, that means it's got to go down, right? Well, no, it doesn't, right? It can continue up there for a while. So be aware of that as well.
Yeah, you're not going to get me to agree that, oh, Ray, it's overbought, therefore we must sell. That is not the way that the RSI works. But I know
No,
that that is a common thought because, well, we're human, so we hear overbought, and the
yeah,
implication is, therefore, I must be looking to sell, or that means that the sell must come. And that's not the
right.
case. Overbought can stay overbought for quite a while. Additionally, overbought is validating of the uptrend, Ray. So
Yeah,
it's not a negative to be overbought, is it?
that's correct. I think it was well put and well said. Yeah, and as it's showing, I mean now,
Yeah.
look at that run, from beginning of April, basically to right
Hmm.
now. It's definitely an uptrend. So
Yeah, absolutely. So the reminder once more is, as we look at the action of the broad index here, you have a number of key ways to manage risk. For some of you, it's just simple. A move under the 10-day, maybe a close under the 10-day becomes an area where you'd lighten up some NASDAQ 100 positioning. If it maintains, you're good. You might consider yourself good to go. If you get the RSI closing below 70, some traders would use that as a means of lightening up position as well. The point is, we don't know necessarily what's coming next, but we all have our process for management of risk. It's important that you define it and then you stick with that process consistently in your trading. That's where you'll find the benefit of technical analysis over the long haul, is the consistency of that analysis applied to your trade process. So, all right. Right. The one shift here this last couple of days has been in the small caps, and I think it's got something to do with the run. There was a pretty good pop higher in yields. Look at what we've got with the Russell here. Now, the 10-day was not as clean and consistent in the Russell 2000 in our small caps. There's been a couple of deviations, and we should expect that just because small caps are more volatile by nature. But we've broken not just the 10, we've broken the 20-day with our close on Friday. This is looking a little bit different for us, Ray. Talk to us about the trend in this one.
Yeah, I agree with you. It looks like it's trying to build itself into a little head and shoulders action going on. You
Mm,
got the one left shoulder and the head forming, so it'd be interesting to see where it continues to move down to. If it goes down to that next level of say where that gap is.
yep,
Yep,
like
right.
right here.
Yep. So we'll see if it goes to that next gap level where it retrace down to, if that
Okay.
creates that next shoulder or not. Be an interesting formation coming in. But yeah, you're right on how not as clean as the SPX or the NDX is. A little more volatility, maybe we could say,
Hmm.
because of what's happening. Um, but yeah, it definitely breaks down. Looks like it's going to maybe test that next level of support.
Well, it's now more likely to do so based on today's price action, more likely to test this ledge at 2740 approximately than it was, say, 2 days ago. When we were dancing above the 20-day and bouncing off of it, you had these price movements that were validating the 20-day as support, and then Friday changed things for a lot of traders. Now, for some of you, you're waiting around saying, well, Kev, I'm only 2 days below the 20-day moving average. I'm not worried about the broader, longer trend. And you'd be fine to state that if that is your comfort for risk and tolerance, so forth, especially because, Ray, we know that this is not necessarily due to make a lower low. In fact, the important ledge is that 2740, because only under that level do we get a lower low in the short-term trend, and that's when things might become problematic for the small caps, perhaps.
Yeah, that's one of the big questions we get in a lot of the classes too, Kevin, is, when is it truly a downtrend? The
Mm.
definition, lower highs, lower lows. And as you're pointing out, is it next that new lower low, you got to get a series of those.
Mm-hmm.
And the more in that series, the stronger the trend. Um, but yeah, it's going to be interesting to see how it tests that support level. I mean, the 20-day right now is actually starting to turn. The very tip of that, if you zoom into that end of that chart right there,
Yep.
and you'll be able to see it starting to turn right there.
Yeah, it's flattening out.
Yeah, and so if it continues that same route, goes down to that support level, you know, if it breaks, next level goes that another
Mm-hmm.
gap where the gap came down potentially. Um, some folks use Fibonacci's. So, that's another thing you could use also to look at those areas of support and resistance. So that's
Yeah, Ray, I love what you just said there, because you're right. It's not about does that level hold. It's what happens if it doesn't, where
yeah,
becomes the next opportunity for a bounce. And I think we traders get bogged down by finding just the next layer and not considering the possibility that there is another layer of support beneath us. And that's really helpful to be reminded of, I think, because if we're always thinking, well, what's the next level beneath us? That's a good process, because it leads you to suggest, at least subconsciously perhaps, hey, this could go lower than I believe. And the challenge for most traders is believing that areas of support that you designate have to hold up. That's not the way the market works. In fact, that's when we get the most significant moves, Ray, is when we fall through levels that are deemed to be support by the masses. And if the majority of the market is watching the exact same level and we fall through it, we commonly get cascade level moves to the downside, Ray.
yeah. And we and as you know, Kevin, in the classes we had when we were going out live,
Mm-hmm.
many times we go in there. Matter of fact, when we did the virtual class a couple of weeks ago, Scott and I, we tell folks when we're doing this, hey, look left, you know, a lot of more times than not, because
Yeah.
people get stuck. They look at the more recent action, but if you look left and if you extend that line, look at that bottom support level. If you extend those lines out, look where that came in. I mean, you
Mm-hmm.
drew that looking at the near time, but look how far left. Look how strong that level is right there.
Yep.
And
Former
so,
resistance, potential support, right?
yep, so it's wise to look left. A lot of folks think hey, that's too far back. Well, no, it tells you something. It tells you, in traders and institutions and all those folks, they have memory.
Yes.
You know what I mean? And
I
so,
do. I do.
I think it's a wise thing to look left, folks. Whether you're a short-term trader, a long-term trader, uh, it still can benefit you of looking at where those areas were to help you make some decisions.
I completely agree, and obviously I love hearing you say look left to confirm right, and all I hear is Ben Watson's voice in my head, because I'm used to being at the events, and Ben says this frequently. But
Yep.
it works. It can be a helpful reminder. There's a couple of other things that I need to bring up here. First of all, we got a survey request, everybody. This is an opportunity for you to let us know how we're doing in the class. We really appreciate your commentary, your feedback. If you click that link, it opens in a browser window right next to this presentation window, of course. You can get to it post-show. Let us know what you thought. All comments come directly to Ray and to me, and we greatly appreciate that feedback. It's super helpful for us as we build out your subsequent classes like this one. So the next thing I wanted to talk about, Ray, was the bullish nature of RSI. And what I mean is, in a trend like this, we've seen a big move to the upside in price. Ray, we've got the RSI. It looks aggressively pulling back, and yet it's still at 52. So can you tell me a little bit about, in an uptrend where we're getting a pullback, does the RSI have to get down to 30 to be considered overbought, or pardon me, oversold?
No, I mean, you can actually draw support and resistance lines in the RSI as well as a trend line in there. Because a lot of times you'll
Okay.
see a divergence in the RSI, and that can help you identify, so let's say you're looking very bullish on something, okay?
Mm-hmm.
Or you're saying, from what your signals might be and how you have learned and what your process is, and you go, yeah, I think it's going to go to this range. It's going to go up, coming in the future, whatever. However a trader might look at that. But then the RSI is saying, nah, I'm still going down a little bit. So you might
Mm-hmm.
have a bullish overall trend, but an RSI that's going down, that may say, well, you might be a little bit limited, or it may not move up as fast or as far as you think
Mm-hmm.
because of what the RSI. Because remember, RSI is looking at what the closing prices and where the closing prices are in reference to the last 14 days. Are they higher or lower?
Mm-hmm.
And so if you're closing lower each time, that should tell you something that you may not see those highs you're thinking you're going to get more near term.
Mm-hmm.
How far your RSI goes out, in this case, 14 days. And so that's something to look at. And right now, even though you have an overall uptrend, but if you look at the peaks of that RSI going back to the middle of April, and you
Mm-hmm.
draw a line from there to where it is now, the RSI is trending down.
Yep.
But what is the overall trend of the Russell? It's going up, right?
Mm-hmm.
So that's a divergence. And so that's something that you should look at as a trader, is like, well, where, are we in sync? You,
Yes.
you might want to see the RSI trending up and the pricing trending up to get that more of a positive um, inkling of direction.
Sure. Love that. And especially now, Ray, when we see what's occurred with price, right? You made a lower high in the RSI, and price up here was running into resistance and couldn't break through. We really shouldn't be surprised by that, because price action told us something similar. And ultimately, what RSI is doing is more confirming trend than
Yeah.
anything else. In the instance of the Russell, the fact that it's down in this area is not a negative. It might tell us, everyone, that we've reached oversold conditions already in the price movement, because the RSI in a strong uptrend doesn't have to get to 30 to be considered oversold. In fact, it can find the mid-range, the 50 line, to be oversold in a strong uptrend. Conversely, if we're in a downtrend and you're looking at the RSI rallying as price rallies, but rallies commonly into resistance, you'll find the 50 area of the RSI to act as resistance and as overbought conditions that may lead to continuation of a downtrend. So the hope here for bulls is that the RSI is telling us what we already know. Strong bullish uptrend, finding potential support in the short run, and it may be able to continue the broader, in this case, 6+ week uptrend we've witnessed. So
Yeah.
we'll
As a
see
matter
if
of
that
fact,
carries.
yeah, and as you're talking, and the market's turned a little bit,
It
and you can
has.
see right now, look at that little the hammer is kind of forming at a
Mm-hmm.
level of what? Support.
Potential support,
Yeah.
exactly.
And so that's the other key thing is and folks, when you come out to the classes or you go on and look at other webcasts, that Kevin does a lot of those, and other team that he's talked about, Brent, who's on our chat, you look at the technical analysis, and one of the things we talk about is these candlesticks and the patterns they develop at support and resistance tell you a lot. And right now you're getting a hammer forming at support. That's more of a bullish signal than a bearish signal.
Sure. So might be too early in the day. We know
Yep. Yep.
intraday movement, this stuff can be tricky, obviously, and traders, we look to closing values far more than we do the intraday values. But this is could be a significant development. It definitely bears watching if this candle flips green, and we know then that tells us that the current trade is above the open. Well,
Yep.
that's a positive on an intraday basis and could lead to a close over even the 20-day, which may, for some traders, invalidate the nasty candle we had on Friday. So, plenty to keep an eye on here. We should also take a quick look at yields because yields popped to the upside. And I think, Ray, this is exactly why we saw the ugly candle we got on Friday for the Russell. It wasn't that yields are up, it's that yields are up through a significant level of former resistance, in this case, the 4.5 level on the 10-year note.
Yeah, I think that you summed it up well on that. And that was some that I think over the weekend, and people are looking at that going, hmm. And so they do that, hmm. You always get that, hmm, kind of like,
Did,
hmm. And so, yeah, very good point. Very good point.
So this is a bit of a problem in a number of key areas. I say a problem because the market would prefer that we don't have yields this elevated.
Right.
We know the impact of elevated yields as it relates to small caps, but for all of us, it's a big negative, unfortunately, as well, because it leads to higher rates in many of the things that all of us need. Right, for your vehicle loans, it leads to higher rates. For your home loans, it leads to higher rates. Not exactly an ideal situation. It would behoove the market favorably if we could get the 10-year underneath that 4.5 again, and that's what you want to look for. And again, we talked about this last week. I stated, hey, if we make a move through the 10-year resistance, the market's going to react negatively to it. The same can be said the other direction. So if we can get yields pressed back below 4.5, the market's going to look at that favorably and bring us possibly tailwinds instead of the headwinds we've experienced here. So pretty significant development there. Now, okay, we're going to look in on the semiconductors. There's not a lot to say about these guys, Ray, because they have just been an absolute beast to the upside. The trough to peak move here did pretty well. How about 70% over 7 weeks, Ray? Was that good? Was that good?
That's okay. Yeah.
It's okay.
It's okay.
What else are we gonna say? 10
Yeah.
day, maybe 20-day here. This is
Oh
kind of a
man.
little tricky, just given the volatility of this space. Maybe.
Yeah. And it's, I mean, look at the when you went back earlier on the broad indexes, and it's looks very similar, doesn't it?
It does.
A little tail off. And I wonder if they're driving any of that. What do you think?
Yeah, I think semiconductors are pretty intriguing to the broader traders in the market. The
Yeah.
majority of traders, yes. We are seeing some interesting developments though, because we have got the RSI under the 70 line. All right, that should not be a surprise, but it might be leading to a bit of a pause in this trend. Maybe the 10-day doesn't hold. We're beneath it right now, so we'll look to see if we get back above it by the end of the day today on a close. But we shouldn't be shocked at all. You got a couple of things here, not exactly a gap level, but still looks like horizontal support, and then another one right beneath us where we paused previously here at this layer. So you've got a couple of areas for potential bounces that would be maybe continuation of the longer uptrend here. Is there another area that you're watching, Ray, just given the significance of this move? Because since we took out those highs, it has just been off to the races.
Yeah. I don't. Yeah, man. I hope it doesn't go back and test that level. But
Yeah,
yeah, I think you do have there. And I got a good comment in the chats. Is that negative divergence? Yeah, somewhat of a negative divergence. You can see,
sure.
yeah, right there, pulling back down. And if you look up at where the market was going up a little bit, but then it did pull back somewhat. So it's kind of tying back into where we are right now. But it was showing earlier a little bit of negative divergence before, and it came to.
Yeah.
Uh, so I think you identified the level. More short term, there looks like a little bit of support right where it's hitting at right now, currently. Yeah, right in that range right there.
Sure.
And
Yeah,
so,
I can see that.
yep. So that would be interesting to see how we continue through the day on that. Um, I think I don't know if we're gonna look at some of the individual stocks in there or not later
Yeah.
on.
Well,
The,
we have to. I mean, it's kind of a big week. I think
yeah,
there's a little company by the name of NVIDIA reporting this week, probably have a little bit impact on this space and the broader market. So yeah, we'll definitely pull that, and we're going to look at it momentarily. But as we wrap up the discussion on semis, at least, I wanted to agree here with Rita on the divergence in semis. Yes, we have a divergence. I mean, we had a high in the RSI here, right? This is a great reminder of why a high in the RSI does not mean you can't stay with the position. Look at that. The RSI here got to 85, everybody. And what did we do? Oh, we pulled back a little
a
bit.
little
And
bit.
then when we got through the price level there, it was back higher. But notice we did not make a higher high in the RSI. So yeah, we've had a divergence, a bearish divergence per se. And yet, I mean, the trend is still up, even on a pullback. If we pull back to the 20-day, you're still going to say, well, I was better to have held through this mess. And we could, because even though we pulled back to the 20-day on deck, well, that's still higher than I was before we got the breakout. So don't be misled by overbought, oversold conditions. So, what does the RSI tell us about that move? It tells us that we were maybe due for a pause, not a reversal. And Ray, I think that's the hardest thing for most
Yeah.
traders getting familiar with these indicators and oscillators is the belief that, hey, overbought or maybe a bearish divergence in this case, that means the group is due to reverse. That's not the case. A pullback is not a reversal, Ray.
Yeah, it means it might not move as far as like I said earlier. We talked.
Mm-hmm.
This means it might not be moving up as far as you think or as fast as you think. Um, and so it's a good idea to look at that and watch those levels of support and resistance. And I think you tied that nicely. And you notice where those peaks were.
Mm-hmm.
It's going, okay, wait a minute, maybe a little pause here, little pullback, test some support areas.
And there's nothing wrong with that because the truth is the market probably needs that
Mhm.
test to validate the trend, right? So we shouldn't be surprised at all by that type of a maneuver if it plays out that way.
Yeah.
Okay, so we're going to watch the 20-day here. Yeah, we're through the low that we created on Friday. Maybe a little bit more downside potential bearishness intra-period here, but the broader trend above the 20-day remains bullish to this extent here. I think that's the takeaway on semis. And so with that in mind, let us use the expectation for this week. Let's kick this into some individual stocks. I do want to talk NVIDIA just because of the upcoming report. Now you've got NVIDIA trending higher. We just made new highs last week. That's the new all-time high there on the 14th, and NVIDIA's breathing a little. I'll put up all my major moving averages just to remind us of maybe the prevailing trend line as it relates to NVIDIA, Ray. It looks to me to be the 20-day here, and I say that because we've been above it, once more above it since early April. But Ray,
Yeah.
it's really the throwback after the break higher that caught my eye right here.
Yeah. And again, look at that. Yeah, look at that pretty strong level right there. Resistance. It broke it. It came back and tested it again.
Mm-hmm.
Right on the 20-day moving average even. Look at that.
Yep.
And so it's yeah, moving right along well. And I think the 20 days acting a pretty strong level of support. You could throw the 10-day in there again. I know I have a 10-day on my chart next to me that I'm looking at,
Yep.
and it kind of gives you that. Yeah, you go. And
So
so
Ray,
a
this is
little
a little
tighter, but
tricky. Would you say it's tricky when working with the 10-day? And I'm going to ask you this specifically because look, you're 1 day close below it, 2 day, 3 day, four. Before day 5, you were finally back above the 10-day. What happened in this area here? Can you see traders getting taken out of their trade as he had these 4 days under the 10-day like that?
it could be. I know one of the things that I tell a lot of folks in the classes is, before you got into the trade, what was your exit strategy? And so, one of the things that I know we've taught in the past is, look at those support and resistance areas. And when it gets a percentage, whatever works for that individual trader, what's your exit?
Mm-hmm.
Is it a percentage below support? Do you use the moving averages? So
Okay.
it's depending on it really is depending on the individual trader and where they look their risk, put their risk tolerance in. And so in that case, it could, it could have taken some traders out, depending if they're a little tighter. They don't like the risk levels. So it depends really on that as an individual might trade.
Mm-hmm.
Uh, but if you notice when you drew that level of support in there and or resistance, depending
Yeah.
on where you are, it's still holding on that horizontal as well as the vertical. I mean, the horizontal as well as doing a vertical
Mm-hmm.
average type action.
So what I'm hearing is, okay, we pulled back to horizontal support. Yes, we broke the 10-day speedy uptrend line that had been working, but we held support horizontally. And
Yes.
what some traders would say is, we didn't make a lower low in the short run. We traded to the breakout spot and held it. And I think that's maybe the takeaway. There's a lot of ways to go
Mhm.
about trade management here. And yeah, you could have been the trader taken out based on a move under the 10-day, but perhaps the day where we made this real strong bullish candle to the upside, I'll put a little arrow on it, that was a hold day because we closed above the highest trade on the day we made our lowest low, which was this day on the 4th on this pullback. And it wasn't an insignificant pullback, I'll point out. It was about 10% over 5 to 6 sessions. So it's not small. And if you were trading this whole move to the upside and you're up 30 or plus percent, you may have decided, hey, I don't want to stick with it to give up 10% of my profitable upward move, a third of my upward move, just to stay with the position. But the reminder, I think, is important here. It didn't give us a lower low, Ray. It held and gave us matching lows. And that, again, is an important reminder about trend, isn't it? Because matching lows are okay.
Yeah,
Lower lows, not so much.
very true. And if you also notice, what is the pattern that it's forming right now? You know,
Yeah, a
with
bit
the
of a flag.
bit of a flag. And so, and those are very bullish in nature,
Mm-hmm.
if you're in the uptrend already, which we are.
Yep.
And so that's the other thing to look for is, what does the flag make? And remember, folks, a flag is not a flag if it retraces more than half the pole that you've identified.
Great.
So be aware of that as you're watching it, as is one of the little techniques you can look for.
Mm-hmm.
And so right now it's forming a pretty good flag pattern. Uh,
Yeah.
it's holding that really short level of support right up there, right around the what is that?
Well, we're going to call it 224
Yeah, right around that area.
ballpark.
Remember, support and resistance is an area.
Yeah.
And so it's holding up right there. It's depending on how the flag forms, if it does at all. Um,
Mm-hmm.
use that as another point.
I love what you said about the flag, by the way. When we get these upward trajectory moves, the speedier the flag to the upside, the easier it might be to represent or maybe call out for ourselves. But that 50% pullback that you mentioned in the formation of a bullish flag, there's a little axiom about that. They say that flags fly at half mast, right? The
Yeah,
cloth portion of the flag can
yeah,
be built out for a 50% drawdown of the flagpole, and that's exactly what you're talking about here. If we drew it in utilizing the Fibonacci tool, so we don't have to do the math, because anytime we can do it without doing the math, I'm a fan of it. Boy, look at where that
right,
50%
yeah. Look at
resides,
that.
Ray. Pretty close to the 10-day, equal to the horizontal former resistance, now potential support. And so it does let us know, hey, if we build that cloth, even if we got down to 216, 217, 215 zone, it could still be considered bullish in nature, Ray.
Yeah, and that's a good use of the Fibonacci drawing to give you that tense. And by the way, look at the 23.6
Yeah,
retracement level right where it
where we're
is right
sitting right
now.
now.
And so the candle just before where it started, you got the gap up. So yeah, there you go, folks. That's
That's pretty interesting stuff. This is one of the things I just love about technical analysis is the ability to apply these additional draw tools and get validation. The hope is that we're doing so properly, not allowing it to not allowing our bias to lead, but rather allowing the technicals to lead the viewpoint. So that is interesting, given the move here from the most recent bounce. And as Paul is noting here, we can go back to the bottom of the rally, basically when the rally began, and you'll see that we also coincide with the 23% retracement, which would be a very strong indication of a short-term uptrend if this were the bounce level from which we made new highs once more.
Yep.
So, everybody, I need to give you some detail on NVIDIA here. We just gave you the technicals. Well, let me give you the setup for the week. We know we're reporting. Morgan Stanley is getting more bullish on NVIDIA, stating that they're set up well to deliver strong fiscal first quarter results this week, paving the way for even more gains. Morgan Stanley also has an overweight rating on the name, hiked their price target already from 260 to 285. That implies upward of 25% upside from here. We know better than to say that all targets are going to be met, but that is the current price target according to Morgan Stanley. They state the following, quote, "It has taken time for investor enthusiasm to return to this story as secondary and tertiary AI beneficiaries continue to outperform. But we think the quarter will be a positive step towards a stock re-rating. The typical beat and raise pattern is a likely outcome," end quote. All of that is according to Morgan Stanley. I found that to be very instructive, Ray, and I wanted to make sure our viewers got it because we gave you the technical viewpoint. It's always appropriate to bring in the analyst viewpoint as well.
Yeah, and then what's really interesting is that that future, that outlook that they're
Mm-hmm.
talking, because you could beat earnings and you can see it drop, 10%, because of what they're thinking might happen later on.
Mm-hmm.
So be careful when you read the whole thing, folks, and read the news and read all of it. Don't just look at the parts you like.
That's right. Yeah, and then of course, assign your process to your trades, right? Make sure you
Yes.
know what actions you might choose to take. If things continue the way that you expect, go against you, go differently than you expect, be prepared because we don't know what's going to happen. And in fact, let's just quickly look at NVIDIA for the week so that we know, Ray, the expectation here. Pretty good bit of IV for the week. Today's notwithstanding, don't pay attention to today's expiration. Go forward to the end of the week. The number here, plus or minus 17 points, Ray, tells us there's a bit of volatility expected this week in these options.
Yeah, and folks, if you ever look at the that right side that Kevin's talking about, look at that 88.54%, right?
Mm-hmm.
You think maybe there's earnings coming out that week. What do you think? All right,
Yep.
that's one of the ways that you can tell that that's happening. And so, if you just did a quick look and you don't want to do anything, you're just looking to see, well, there's one right there.
Yep. And yeah, it's a good opportunity for a move. The price movement here again, plus or minus, that tells us we don't know which direction. It's not directionality. It's letting us know that the implied volatility tells us that we could see a $17 move between this 225 up or 17 down as well. It's about a 7.5% move opportunity relative to the price per share. So it is a bit volatile, but you know what it also can do, everyone, is it can help traders of options to maybe set their risk. Now, we know that options are not approved and available or even appropriate for all of us as traders, of course, and we encourage you to do all the work in advance to be an option trader. So make sure you're going through your steps, learning about it on the channel, following through and applying for option authority on your accounts where you want it. But you do have to do that before trading options. So please make sure you go through the requisite steps to do just that. Now, beyond NVIDIA, we do have some stocks that are in the news this morning. One in the same space here, Lam Research, LRCX. I'm going to put some standard moving averages in here. There's a 200-day. Here's a 50-day in lieu of that, Ray. This has been an interesting pattern development. They were upgraded here overnight at Morgan Stanley as well. So Morgan Stanley living in the semiconductor space, Ray, and they upgraded Lam to overweight from equal weight with a target at 331 up from 293. That is a nice lift in the target price.
Yeah, and folks, don't let a stock that is at near its all-time highs, which it it hit the year, I think the year high at 302 a few days ago.
Hmm.
But a lot of times folks, Kevin, see that oh, it made its high. It's not going to go any higher,
Yeah.
right? And so you can say the same thing back when it was when it hit the high even a week ago. After that, it
Oh,
made
sure.
they're
Right
at
there.
280. It was an
Yeah.
all-time high. Oh, now it went to 302. So folks, please don't let those high and low blocks, if you have that on your display,
Hmm.
uh, make you go, oh, gotta stay away, right?
Yeah.
Um, but yeah, it's all those things that are very interesting. Kevin, one of the things I like that you do is we mix it in with technicals, but you also look back at the numbers, you know,
Hmm.
and the fundamentals, so to speak. Because I know a lot of traders ask that question. What about the fundamentals?
Yeah.
We need to look at that, and the answer is yes, you do. All right, it's a lot of times we say these in classes. The fundamentals are the what you want to trade, and the technicals are when, right?
Hmm.
Give you that punch and when you want to go in or out. But look at that. I mean, it tells you a lot, and I really like Kevin when you talk about that and bring it up because I think some folks get so fixated on the charts they forget to look to say, well, what's happening with the company,
Yeah.
you know, and
Yeah.
that can help you with your decision making as well. Especially when they're saying, well, this is we're going to move this to an overweight situation, or you see all the analysts going, man, so fast,
Hmm.
So be aware of that. I think it's a wise thing to do. It's your money, so
Hmm.
it's take the time, check it out.
Great, man. Some really great nuggets in there, Ray. Don't let a new high dissuade you. Remember, everybody, new highs are not bearish in nature. It doesn't mean it has to continue upward imminently, but a strong trend that's been in play that's bullish in nature. Remember that the trend is more likely to continue than to break. Hence, the
Yeah.
work we do along understanding support and resistance and utilizing that as we build out our trade processes. So, really great stuff today, Ray. Thank you so much for being here, sharing those thoughts with us today. We had a lot of viewers joining. Remember, everybody, we've got a survey opportunity out there. We would really value your input. Take a minute to let us know how we did. If you liked the conversation today, you can hit that thumbs up button for us. We're going to get this reviewed and into the archive as quickly as we can. So that's very helpful for us as well. Ray, wonderful time though. I love getting you once a month. Appreciate you being here, man. Thank you so
Uh,
much.
Thanks for letting me have, it, man. Appreciate being here as well.
Absolutely. And big thanks to Brent managing the chat as well. Follow us on X. Make sure you're subscribed to the channel. We got plenty more to come for you today, obviously. Live content all the way through 4:45 p.m. today. Hope you all have a fantastic Monday. We look forward to seeing you again real soon.